Very good, everyone. Let's talk here about an investment, about a trade we made on the selling side of NUI. Basically, we took advantage of the drop. We seized the opportunity on the selling side, but we went for a put option. What is a put option? A put option, basically, is when we have a contract that increases in value when the stock price goes down. So there's a way for us to invest in the market through contracts called options, which have the ability to increase in value when the market goes down. And that's what you're going to learn here today. Basically, just so you get an idea of how cool options are, at the moment when this opportunity came up for us, the stock was trading at $123. $123.90. However, this option was priced at $7.75. In other words, I had the same potential to profit from the drop, but instead of investing $123, I only invested $7.75. Pretty cool, right? But there's a catch here. To buy this, we have to purchase in lots of 100. So the minimum investment is $775. I ended up buying 2 lots, so I paid $1,550. But just so you understand, you don't need a lot of money to be an investor in the American market because the options market is huge. The world of American options is enormous, and that gives us amazing opportunities for profit, okay? This is one of them that I want to share with you. So basically, what did we identify here before anything else? We noticed that the stock was in a downward trend, very linear and solid, and when it got to the week of December 9th, there was an opportunity for it to keep dropping. So we made this trade. Look, December 9th, and we found an option expiring on April 17th, guys. Basically, here we have January, February, March, and April. Yeah, December too, right, because it was in the first half of December. So we had 5 months ahead of us to profit from this drop. But what happened? We timed the option so well that in just the first 3 weeks, it already had a significant drop, falling 10% in 3 weeks. What happened then? Our options increased in value. And then we made a profit on these options, which I want to show you here. I'll even grab my notes here so we can go over the calculations together to make it even easier for you to understand. So basically, we have this opportunity to profit, we understand the options, and we know that we have a minimum investment of $775. So I bought 200 options, okay? So 2 lots of $775 each, which means a total investment of $1,550. That was the amount. I could have invested half of that, $775, but given my capital, this amount is fine. All right. Very good. So these 10% that the stock dropped, yeah, the option increased in value significantly, guys. But it didn't quite reach 100%, okay? It went up by about 80-something percent, almost 90%. So, what do we have here? This is a lesson that we only shared here in the club, but I'm going to let you in on it. We have it noted down here, and this comes from 14 years of trading experience, that when we see a drop or rise of about 6% in the stock, the options usually go up by 100%. That's an average, okay? And what happened here? The stock dropped almost 11%, and the option didn't even reach 90%. This shows us a bit of the weakness of this option. So, this contract we selected wasn't that exciting. The market wasn't really betting on it, because even after the stock dropped almost 11%, it didn't even reach a 100% gain. That's when it hit me to protect part of the trade, so if it bounced back, we could exit the position, okay? And that's exactly what happened, folks. I sold at $12.50. So the 200 options gave me a profit here of $4.75 each, which comes out to $950. So I invested $1,550 and made a profit of $950 on this opportunity, okay? So all of this was shared within our club, taught, and tracked week by week, and here it turned out in a really interesting way. Remember how we had until April? Well, after that, the stock went up significantly, those options became almost worthless, and then it dropped sharply, really, really sharply. It actually hit a 20% drop here. Yeah, whoever held on until April made a lot more profit than I did, but it really wasn't advisable to do that, because once the stock turns around and goes against our trend, it basically becomes a shot in the dark. We lose track of where the stock is going. So basically, here we spent 3 weeks investing $1,550, making a profit of $950, and that's how we wrapped up this trade, okay? Whoever managed to hold on made a lot more profit, but once again, we're being transparent about what we do here. This was my profit, which, in my opinion, is an excellent return. I have an operating capital in the brokerage, guys, of $100,000. So, if you take that $100,000 and divide it by 950, I have a 0.95% gain year. That's almost 3 months of American fixed income returns on the entire amount by investing just $1,500. Out of the total amount, I have $100,000 there. I only used $1,500 and made a 0.95% profit on the whole amount. This is a kind of power that, if you don't have financial education or don't know how to do the math, you might not appreciate how important this really is. But if you understand compound interest, if you understand proportionality of time compared to investments, this here is a powerful tool for building wealth, putting in a small amount of money and getting a very significant return. All right. If you like this video, subscribe, share, and like it, because that motivates me to release more videos like this for you. God bless you all. Take care. Bye-bye.